we're live with the Bitcoin Beat with Shaun and Jeff. This is our second episode. I'm Shaun. This is my co-host, Jeff Tiefenthaler. Boy, we had a pretty eventful week this last week, haven't we?
Definitely. Always something shaking and baking.
Yeah, and some exciting news too. We got a pretty big announcement coming up. So you want to stick to the end of the show and take a look and see what that announcement's about.
Kind of sounds like an announcement about an announcement.
Well, yeah, if you know, you know.
Got it.
Let's jump right into it. Shall we start covering some of our notes from what happened this last week?
Yeah, let's do it.
One of the interesting things is I thought there's quite a few miners in the space that have been capitulating and selling Bitcoin. And unfortunately for them, a lot of these companies were buying at the top or mining at the top and then selling when the price is extremely low. We got Riot had announced that they had sold about 289 million worth, and the average price that they sold it at was 76,000. And then we also had Marathon announce that they had some pretty big sale up to $1 billion worth. They sold at around 65,000. Some pretty big losses overall, but it's not just these miners. We even have some digital asset treasury companies that are capitulating. This one looks really bad. This is Nakamoto. They had sold 284 Bitcoin, averaging about 70,000. What's interesting is they're not a miner, so they literally are a buyer for their strategic reserve, their own treasury, and that's what they're in business for, is to hold this asset. And they bought at an average of 118,000, which is a rather large loss for them. That's something we don't see too often, these miners selling at historic lows. I don't know if there's going to be many more of those. What are your takes on that?
Yeah, it's not everybody is immune from buying high. It's important to be immune from selling low. And what we're seeing in this space right now are big publicly traded companies having to do just that. And, these are companies that have shareholders, they're traded on the NASDAQ, and they have obligations, quarterly obligations to their shareholders. So it's just kind of interesting. I think of something a wise person once told me, which was, the difference between knowledge and wisdom is knowledge is knowing that a tomato is a fruit, and wisdom is knowing that you shouldn't put it in a fruit salad. And I love that because it's just kind of funny when you see I want these companies to succeed, but they're also trying to operate within the traditional financial system, which is a credit-backed system with fiat currencies, and they're operating in this new paradigm, which is Bitcoin, which operates with absolute finite programmable scarcity. So it just kind of, it's kind of sad to see, but I guess on the flip side, their coins are getting distributed to people with stronger hands. I don't know.
Yeah, that's a good point. I mean, the quarter-to-quarter issue is something that's pretty interesting. I know Berkshire Hathaway, a company I used to work for, one of their subsidiaries, and I would be interested in the annual letter to shareholders. And something that was a common theme that was in there is when they take these companies and make them private, they're part of their own conglomerate. They don't actually have to report quarterly all those minute details. They do give an overall snapshot of their holdings, but that would allow, for example, whether it's like Coca-Cola or like a Geico, which was a wholly owned company by Berkshire, they wouldn't have to necessarily meet targets every quarter just for their shareholders. If they could make profits long term, they would make profits long term. And that's interesting. With these public miners, every quarter they have shareholders that want returns, and so that might force them to capitulate when they want to, when they don't want to, and that could be problematic for their bottom line.
Yeah, what do you think this means for the long-term outlook of the miners, especially the publicly traded miners? Or I'll expand that to digital asset treasury companies too, such as Nakamoto.
Yeah, I think with the miners, I also heard with the Marathon news that they're laying off about 15% of their staff, their workforce. They're transitioning, not completely, but pretty massively into the AI space. And there's a lot of like bleeding crossover between companies that can host miners versus ones that can do AI compute. Very similar profiles when you're talking about just needing buildings, land, and cheap energy. I think that means that if they can find more stable income, they're going to want to diversify. So especially Mara's shown that. I don't know that Riot's really aiming for that. Digital asset treasury companies, they have some other issues they got to worry about. Like if we tie that into MicroStrategy, they have it set up in a pretty good way with their flywheel where it won't matter how low it gets, they can weather any kind of dip. And in fact, I think the last numbers that they publicly came out with on a podcast or an interview, maybe it was that conference out in Florida recently, I'm trying to remember which one it was, they said that Bitcoin would have to go down to about $9,000 per Bitcoin and stay there for like 3 to 4 years before they would ever be forced to try to sell any Bitcoin to cover other expenses. So these other digital asset treasury companies like Nakamoto, a little bit newer, maybe a little bit less experienced management, and some of them are just cookie cutter copycat styles. Maybe they're not as prepared for massive drawdowns. That could help force a price to go a little bit lower than it would otherwise, but then that means the businesses, the corporations, the ETFs are getting the ability to buy those at a cheaper discount. So in the end, I think Bitcoin's fine, but not every digital asset treasury company would be.
Yeah, and that's such an important point. In the end, Bitcoin is fine. And actually, you think about the tertiary or second order consequences of this, and it could be a good thing in terms of decentralizing mining operations. Perhaps there is some friction around being able to centralize mining operations in a publicly traded vehicle, as we discussed, which is required to report quarterly and inside this traditional legacy fiat system, as opposed to now these Bitcoin miners are selling their Bitcoin and potentially coming offline. And so the difficulty adjustment, which will drop in that case, will incentivize people to come in because it'll be easier to mine and be rewarded for your efforts. So I think it just goes back to the fact that Bitcoin is one of the best self-regulating protocols in the world. And perhaps this is a good thing for individual miners who are not subject to those, quarterly reporting requirements and shareholder requirements that public companies are. And they can just, be more nimble. They can plug in. They see the difficulty has gone down. By the way, for those who don't know, the difficulty adjustment is something that happens approximately every 14 days, which is around a little over 2,000 blocks, I believe.
Yeah,
and so what happens?
2,100 blocks. Yeah, you're right. Which is like roughly every 2 weeks. Yeah.
Yeah. It's roughly, and it's a beautiful thing that was built into the Bitcoin code that allows it to self-regulate. So when miners have to shut down, the difficulty to solve or be rewarded for your efforts drops. And when that difficulty drops, it incentivizes more miners to participate because they now see that it's easier to be rewarded. And the result of that will be the difficulty goes back up. So it's very self-regulating, it's self-enforcing, doesn't change anything about Bitcoin. But it certainly can hurt and damage sentiment, which could result in a short-term price drop. But as we see today, price is up a little bit. So who knows?
Yeah. The short term is definitely something that they have to worry about more than long-term hodlers. We just see it as a better buying opportunity. Right. Actually, one thing I wanted to bring up in reference to MicroStrategy is they got back to buying Bitcoin this week. So every once in a while, normally on a weekly basis, they'll announce how many they bought. We talked about this a little bit on our last episode when they were on pace to hit 1 million. So they bought another 4,871 Bitcoin, which bring their total Bitcoin that they now own up to 766,970, getting that much closer every week to hitting their million. And right now, if you do the math, using Grok to help with this, It's estimating at their current pace in 2026 of buying roughly 6,900 or so Bitcoin a week, they're going to hit 1 million at the end of November. And that's every week. It amazes me. It's kind of mind boggling that they're at that pace.
Yeah, they are a machine, and they just are able to lever their balance sheet so well that they can do this. And I guess it is one of the, like, they've hacked the traditional fiat system, right? By able to issue their own shares and take that capital and park it back into Bitcoin. They have created this amazing flywheel that allows them to do what they are today. I don't know. Do you think anybody will come even close to what they've been able to do in terms of accumulation?
Yeah, I really don't think so, because in any scenario with the moat that they have right now, the amount that they have compared to even the next closest treasury company or even just holder in general, the best thing that they hope for is a lower price so they can buy more, but that also means Strategy's buying more with Strategy, Stretch, and their other products. And that flywheel, I use the term hacking fiat. It's just an endless cycle that they're in a position where I think mathematically nobody could catch them. I mean, other than when we talk about counterparty risk, right? There's no issue with Bitcoin. There's no CEO, there's no board, there's no regulation as far as governance. It's all coded. Companies run by people. People are infallible. They have issues. They're not infallible. They can be unethical. I'm not saying Michael Saylor's, but you never know. There's been a lot of names in the past where they've been doing things fraudulently. That's really the only risk to them, and there's been no indications that there's anything shady going on with them. So my short answer, no, I don't think anybody could catch them, no matter what the price does, especially if the price continues to accumulate the way we think it would, based on like the M2 money supply and any kind of methodology you use, whether you're doing like RSI, 4-year cycles, the gold to Bitcoin ratio. It's only going to be going up long term, which makes it that much further out of reach based on people that can raise capital. I want to kind of transition into something you had talked about that we're going to bring up for our viewers here, speaking about hacking. There was this Drift protocol hack that just was recently announced. What's your understanding? You've dug into this a little bit.
Yeah, it caught my attention over the last couple of days. This is the biggest hack, if you want to call it a hack, or exploit in 2026. It happened within the Solana ecosystem. We were notified about it on April 1st, but approximately $285 million was exploited through this DeFi protocol that utilizes perpetual futures and swaps. So the story, really, what's fascinating about this, it's not the typical hack, right? It wasn't like a smart contract exploit because some developer put a bug in the code. This was a socially engineered hack that took around 6 months to work through. And this firm, apparently they're associated with North Korea, allegedly. I don't know much about that, but this firm would go to conferences and get on Discord and meet with contributors to the Drift protocol. And over time, they were able to build trust with these Drift contributors and insert malicious code to the Drift protocol. So it was really a hack on a human, not a hack on a protocol. It was a hack on our human nature. And it's a good reminder of things that we can do to be careful in this space.
Wow, and that seems massive, as far as 6 months meeting with developers, shaking hands face to face, going to conferences. And if I'm reading this right, they actually, the bad actor that was getting in bed with these people, they actually had to pony up about $1 million of their own dollars to interact on the system and the network, which it makes that social engineering aspect even that much more plausible, easier to understand, because if somebody's putting their own money in, it's a company putting $1 million of their own funds at stake, you wouldn't necessarily think that would be an issue.
It definitely wasn't a normal hack. They integrated themselves with the people that were building and contributing to this protocol. And one of the things that happened was a Drift contributor cloned code, a code repository shared with them by the North Korean hackers or this fake firm. That was one thing. And then the other thing was another, I don't know if it was the same Drift contributor or a different Drift contributor, but they downloaded a test flight app that was presented by the hackers as a wallet product for their front end. So those two exploits caused this vulnerability. And when you look into some of the security devices and implementations that the Drift contributors were using, it wasn't that they were being negligent with the technology. It was just that they were being negligent with their due diligence. And it's a great reminder of all of us what we can do from a due diligence standpoint, but also from a technology standpoint in order to self-custody and stay safe.
Yeah, it sounds like there's a lot of things that they should have been doing that even regular people like you, me, and our viewers could be doing. When we're talking about this, it reminded me of other targets. Now, this is on the Solana network. It had really not much it really didn't have anything to do with Solana, the technology. Like you said, it was really the people and the policies and their own due diligence. But it is somewhat of a newer space than like Bitcoin and even Ethereum. They've been around a while. They've had a lot of attacks on them. So the people that have been in that space for a while are probably a little bit more accustomed or prepared. Like, for example, I was thinking of like Strategy. They're one of the biggest holders. We were just talking about them of Bitcoin. So they would be they'd have a huge target. They'd be a sweet honeypot for them to try to get into. So a company like that would have to be prepared, but it's all internal. It's not necessarily technology based. They'd have to make decisions like limiting the access to who has your signing devices and doing regular security reviews and like even awareness training for employees, or like if we're talking about us, for family members. Time delay unlocks, so that way there's not the ability to move funds within seconds, but having a little bit of time between there. And you had mentioned the air gap storages, other solutions like that. It makes me wonder. Last week I had mentioned I wasn't necessarily jiving with Saylor's opinion to not disclosing any of his wallet addresses to show what he has. And although there's no technical security issue with that, it could prevent, maybe there's a reason behind that from the social engineering aspect. If they could track wallets, see wallets, when they move, how they move, that could give them another angle to whoever's in control of those to try to get in and take over parts of their devices and remote attack them. It kind of makes me second guess some of my opinions about that too.
Yeah, I would say I think Strategy can still publish proof of reserves without disclosing any of the operations behind how they custody their Bitcoin. I think that would eliminate some of the concern with regard to, whether or not they actually have the Bitcoin they say they have. I'm not personally concerned about that because they do get audited by one of the big four auditing firms. So it would virtually be fraudulent for Strategy to lie about how much Bitcoin they have. But to your point, it's like, what is the process? And this is a call to action to not be negligent. And as individuals, we can do very simple things that I really hope companies like Strategy are implementing themselves, right? Don't trust links from strangers. Don't open links that people send you. Don't download software that hasn't been verified. When it comes to some of the basic security rules of self-custody, one, keep your signing keys on completely separate machines. Two, used air gap devices. And basically that just means you're using a device that to sign your Bitcoin transaction on a device that's not connected to the internet, right? 3, never mix everyday work with access to user funds. 4, this is one that that we really like at our fund at the Bitcoin Denominator group is consider time locks. So if there had just been a time lock with the Drift protocol, these hackers wouldn't have been able to. Oh, I shouldn't say wouldn't have been able to. It may have been mitigated. This exploit may have been very mitigated by having a time lock, which basically is a period of time that must pass before the transaction goes through. And every serious projects know that these are the basic security rules, and the question is, how do you know whether or not something that you're invested in abides by these sort of protocols and best practices? And oftentimes you don't. You're trusting the actors. So in this space, what they like to say, right? Verify, don't trust.
Yeah. That's some very good points, because the things that apply to like your business and these businesses that are at risk really apply to just everyday people like you and me, not just the big corporates. And some good things to think about, ways that we can try to protect ourselves. I'm curious if any of the viewers listening, if they have things they would add, things that they do to help. We've talked about the time delay unlocks, we've talked about multi-sig, the air gap solutions, not commingling funds from business to that, and a handful of others. But it's always something that's good to talk about and to internalize, so we can figure out our own strategies. I think that's pretty good. If you're down for it, I wanted to bring up, you had a post today. We were kind of following up on what we talked about last week too, with the Bitcoin to gold ratio. I had mentioned, in fact, let me pull this post up first before we go and look at that one. Gold had the largest sell-off it's had in a month since the crisis back in 2008. So we haven't seen a monthly drop in gold like this for a long time, since the previous financial crisis. And then it just happened to be that you had also mentioned on your X account that you had updated on that chart. What's your thoughts on that?
Yeah, so it's very interesting because we're continuing to track this. And again, we are cherry picking data, but this data began with military intervention in Iran. So it was the day that bombs and missiles started firing. And usually when war happens, people flee to whatever is considered a risk off asset. But in this case, the divergence is clear, right? Bitcoin has outperformed gold in this small window and period of time. And it's even outperformed it more since we talked about it last week. So it's something that I want to continue to track and monitor, because as us Bitcoiners know, the properties that Bitcoin has are superior to what gold has, right? Bitcoin is truly a neutral global currency that's very hard to confiscate, for one. That's really easy to divide, for 2, which is cheap to secure, for 3. And that doesn't need any permission for you to use it. So, as we see this change happening, and if the dollar continues to be weaponized against other sovereign nations, they're going to just look for a new denominator. And we believe that denominator is Bitcoin. And this chart may be a little bit of evidence for that. I don't know. I'm not predicting anything here. It's just some data. And I find it very interesting.
Absolutely is interesting. It's just the expectation in times of uncertainty. You would expect realistically both to be going up, but it does seem like one is playing out to be a better everything: store value, the ability to make it portable, to protect it, to not have it confiscated, all these things that you're mentioning. It is interesting to see that divergence happening on a short, like you said, cherry pick time scale right now, but long term, it doesn't mean gold's bad. It just means it's imperfect. It's not as awesome as the digital version of it as turning out to be.
Right. And the other thing I didn't mention is that Bitcoin is verifiable. Right? We know within the code, we can verify how much Bitcoin exists today. We can't even get an audit on Fort Knox, right? We don't know how much gold there actually is in the world. There's estimates, but we can't verify that for sure. And we also can't verify, it's harder to verify that gold is real. I don't know if you saw that video with Peter Schiff and CZ, the founder and CEO.
Where he handed him the gold bar.
Yes.
Yeah.
Wasn't that great?
Yeah, yeah. For our viewers, can you recall what that was like if they haven't seen it?
Yeah, so it was so funny because they're on stage at a conference, not sure what conference, and CZ hands Peter Schiff a gift, and it's a gold bar, and he starts asking him questions like, one of those questions was like, can you verify this is real? And just the look in Peter Schiff's face completely changed. Like his demeanor shifted, and because he knew the answer, which was no, he could not verify.
He's like, not yet. I'd have to have it assayed. I would ask you where you get it from. He's like, I got it from somebody I trust. Yeah, well, and just the hesitation of not being able to come up with the answer that helps his narrative out was very, very funny, especially for all of us in the Bitcoin space, because we love it when Peter takes an L.
Yeah, it was funny. I saw him at the Bitcoin conference last year.
Oh.
I approached him. He wasn't the most approachable person, maybe because he was busy, or maybe he was just tired of all us Bitcoiners telling him he's an idiot.
Yeah. I didn't catch him until the very last day when all the booths were wrapping up, and I got a picture with him, and I was wearing my shirt that said Bitcoin fixed this. And he's like, another one of these guys. Is this going to be my last one, my last selfie of the day? And he's not wrong. He is probably responsible for a lot of Bitcoiners becoming Bitcoiners, because when he preaches all that sound money and the economics of it, they not only all apply to Bitcoin, but Bitcoin makes that even better, his arguments. And he's one of the biggest people pushing Bitcoin. He just doesn't want to believe it.
Right. It's so true. I think gold bugs are really the low-hanging fruit when it comes to Bitcoin adoption, because I think the problem for them is that it's not tangible, right? They can't touch it. And so that's a hurdle for them to get over. But once they get over that, I think they're very open to Bitcoin. And in fact, many of them start allocating significant resources and capital to Bitcoin. So it's kind of cool to see.
Yeah, no, you're spot on with my same opinion on that about not being able to touch it, physically hold it. I remember, I'm old enough, I don't need you to admit how old you are, when we started having a lot of digital photos. People are like, no, I want a photo I can hold in my hand. I can put it in my photo album so I can turn pages and have memories for it. And now, fast forward 2026, if you hand me a photo, the first thing I'm doing is I'm taking a picture of it so I don't have to deal with that anymore, and I'll have it digitally forever. And this is just another thing when we talk about the ability to do that with money and assets and value. I think that's one of the biggest sticking points, and slowly people are moving on over.
Yeah. Next time you introduce yourself to someone, Shaun, you'd be like, "Hi, I'm Shaun. I'm a master of the intangible universe."
Sounds like some kind of like a Marvel special hero that only us Bitcoin nerds would love.
Right.
Well, 100%. I think we could wrap it up here. I really appreciate some of the things we talked about. I think this gold to Bitcoin ratio discussion should be something we follow up on. I know you follow up on it pretty regularly on your Twitter, so we'll have links down below for anybody watching. Definitely subscribe to him and myself and check out some of the stuff we post. We're really excited too, because we have that big announcement I was talking about. So we have our first guest joining us on likely our next show. Hopefully, if things work out, it'll come out tomorrow. So if you haven't subscribed to our YouTube channels, do that, because you want to be able to see that as soon as you can get access to it when it drops. But it's going to be pretty big. We're pretty excited about that. And one other note too, for any of our viewers that are in Southern Arizona and Tucson, come on out to our Bitcoin social meetup tomorrow night. So tomorrow evening, first Tuesday of every month, we have a hangout, a whole bunch of Bitcoiners hang out. You can meet people like me and Jeff there and others. In fact, it's our first meetup that we have with our new sponsor. It's our first sponsor ever that's going to be sponsoring us. We get a discount on buying food. The specifics on where and the address and any future meetup, we have our Facebook group, which is linked below. You can join that, or the public-facing meetup.com group also has all that same information that you can join on there as well. Jeff, any closing remarks for our viewers?
This has been a great pod, Shaun. I really appreciate you and your energy and your effort to help people understand the significant importance of Bitcoin. And that's really all this is about, right? We want to meet people where they're at, help them get off zero, meaning a lot of people still have zero exposure to this asset class. And I think ignoring it continues to be proven as one of the greatest mistakes. And so that's all we're here to do, is kind of help shed light on what's happening on a week-to-week basis. The space moves fast, which is why it's our commitment to you, our viewers, to show up here and help shed some light on what are the real issues. I think we've done a good job of that today, Shaun. So I just appreciate all the work you've done, man, and look forward to seeing you tomorrow at the meetup.
Yeah, I appreciate that, and I agree with all those comments there. Listen, if you don't have any Bitcoin, get off of zero. And if you do have Bitcoin, keep stacking sats. We'll see you guys next week.
Peace.